It was an absolutely grueling day in the markets, and yes, the markets have chosen a path, and it was in favor of the bears. It was absolutely painful watching those charts if you had any expectation of an up move, but there were winners on the day. Palantir hitting that high target of $29, SQQQ swing trade in full force to the upside, and I did make some call alerts for Amazon that didn't pay off today, but I held them going into close purposely because I believe that there is the opportunity for some sort of a bounce. Netflix absolutely getting crushed. As I indicated in yesterday's video, I saw the formation of a potential head and shoulders pattern with the opportunity for price to come all the way down to $580, and it looks as if it's heading that way. Market fundamentals appear to be dead right now. It's trading entirely off of the narrative, the momentum, and the news. And news is absolutely pushing these markets because we've entered into classic distribution. So what is the narrative right now? Well, it's still going to be AI disruption. The chip makers are still going to be front and center. It's going to be the Fed beating inflation, which has not yet been proven, even though he did seem to be quite proud of himself when talking to Congress. Rate cuts possibly in 2024, and we are seeing the beginning of rotation from big tech to small cap. What is the momentum? Well, we were riding high on early July momentum, but usually that fades out after the first 2 weeks and turns a little bearish at the end of the month, and we're seeing that. And the momentum is still the fact that we are in an election year with potentially bullish catalysts ahead of us. And what is the news that's driving the market? Well, it's been a lot of news that's been pushing stocks one way or the other. First, we had the attempted assassination on Trump. Then we had the Biden crackdown on the chip makers. Then we've had the idea that Biden possibly might drop out of the election because he's struggling with COVID and other various reasons. And we also had the fact that China is possibly considering invading Taiwan. It's a ton of FUD. Not all of it's going to play out. All of it is just what the market makers are using right now to justify these radical swings in the stock market. But really, if you've been following this page, you know that I have been predicting that after we got to 560 on the SPY, that we would go directly into distribution. And these are absolutely the characteristics of distribution. You're going to see easily 2.5% moves up, followed by 2.5 moves down. I'm going to take you guys into the SPY. I'm going to let you know where the support is that I see there. We saw the VIX pop today, but it's definitely going to be choppy, volatile markets ahead. And it's why I warned at the beginning of this week and made a major shift and change in my trading habits to scale down position size. Whereas I might buy 10, 20, 30, 40 calls or puts in a particular position, I was buying 1, 2, 3, 4, 10 on the high end briefly. Scale back your position size, live to trade another day. If you get a big trade right, you'll make a ton of money. But if you get a big trade wrong, you're going to lose a ton. And it's just not worth it when the markets get this choppy. It's the bulls and the bears are going to absolutely fight this range to the death. And that's exactly what distribution looks like. It's when the participants in the stock market simply don't agree on the direction of the market. And so they fight it out until one party ultimately wins, largely getting pushed over their finish line by either bullish or bearish news. This is the Stocks with Josh show. It's been a wild trading day, and if you have been trading alone, stop trading alone and come join the Stocks with Josh Discord, the Chart Goat University. I'm providing technicals and trade alerts. We're going to have some days where we absolutely crush it and some that are not winners. Why I led yesterday's video with the guy that was talking about the yin and the yang and the exchange of life. I'm going to take a pause here because they're mowing the grass outside of my building here. It doesn't matter how long I wait. This guy is absolutely just going to keep whacking those weeds, driving me nuts. So let me just push forward on this video, guys. So I'm going to take you into the S&P 500 heat map, and we're going to see what was working and what wasn't working today. So obviously, it's pretty much across the board a red day, but there is some highlighted green stocks here in big tech, which means that perhaps they've gotten oversold and may be pointing to a potential turnaround in some of the big tech stocks. They might be early leaders, outliers. We're talking NVIDIA, Meta, AVGO, and Tesla's actually gray. It did spend most of the day green. Now, the big question is going to be whether or not Netflix, which absolutely did not do well this evening, and I had highlighted that yesterday, that I was doubtful that they were going to do well, and the charts looked as if there was going to come a capitulation moment. Let me take you into that chart, and I'll just show you what's going on with them right now. It's ugly. So this was the chart that I gave you guys yesterday, and if you just take a minute and you look at the structure, it did appear to me that we would break this level that we were on at around 640 and possibly get a move all the way down to around 580, where we're setting up for ultimately a bearish head and shoulders pattern. You know, the reason why these patterns tend to play out, again, is because the market moves in waves. We're not going to drop all the way from this top of 700, we're not going to drop all the way down to this support of 480 in one single move. There's going to be moments in which it pulls back, and then the sellers cool off and it comes back up. Personally, I see that if we do get back to 580, I would expect some sort of a move, a bounce to get us back up to around 650 before coming back and testing this historic support line. That's the general path that I see for Netflix moving forward. And you know, one thing I want to point out is we are sitting on a support level right here, but I personally think it's going to get broken. We may bounce a little bit in the morning, and that would be setting up for another opportunity to potentially short Netflix down to this critical level of 580. If you're in the Stocks with Josh Discord, you can expect some sort of an alert on that, because this was a pretty bad move down, and more than likely, even though it will bounce along the way, I think that's going to be a continuation to the downside and a continuation of taking profits. And so we're going to try to ride it down to that 580. Like I said, I'm going over 8 charts today, so I'm going to have to be very quick about that. But if you don't know what the Chart Goat University is, I'm going to leave a link in the top pinned comment so you can come and join that and trade with like-minded traders in this choppy environment and get as much TA from me as I drop every day. I'm dropping charts all morning long over there, and I'm going to continue to do that and answer questions. It's a good community. Come check it out. Hope to see you over there. All right, let's take a minute and go into the charts. We're going to start off with looking at the S&P 500. Then I'm going to look at a winning trade, Palantir, and then we'll take you into the rest of the charts very quickly, and we'll wrap this show up. Okay, guys, keeping it very simple. We talked about this when we broke over the top of this channel, that it would likely turn out to be a bull trap, and that the confirmation of that would be to break back under this previous resistance area and continue to go lower, with the opportunity of going all the way down to this 550 level. Well, we've hit it. Now, there's really no significant support on the S&P 500 until we get to 542, even though I would expect, again, a potential bounce here. Ultimately, I believe that what we're going to see is we're going to see ongoing volatility into this area. Ultimately, we'll get to the other side of this channel, and that's where we're going to have the largest determining factor as to where we will go. I would tell you that at this particular stage, expect volatility in this range between this 564 number and this 542 number. Expect the price to move in this range, going towards the bottom and back towards the top. We are likely not going to go into a wholesale capitulation moment because, again, why? Talked about it in yesterday's video. Other than these crazy news stories, what is the narrative? What is the momentum reason? What would be the catalyst for a market absolutely falling apart? We're right in the middle of Q2 earnings now. Also, the market will be driven by the Fed, and we're still going to be driven by the AI narrative and the opportunity to the upside there. And so I do not see a reason why the markets would go straight down from here. This is classic distribution. Again, it's where the bulls and the bears fight it out. Let's run through the rest of our charts. Okay, IWM is of interest. A lot of people want to get into it. I'm going to keep my coverage very simple. We still have the MACD on the 1 hour time frame pointing down. And the truth is, you just really don't want to get into a play when the MACD is pointing down on the 1 hour time frame as a general rule of thumb. Now, we have come back to support at 218, and so this is an area of interest tomorrow morning. I'm going to be watching the 218 area. We could get a turn up on the MACD if we saw a candle go bullish, and then we would begin to try to ride this back up to its recent all-time high. But if in the first hour of trading the markets just want to go all week, then we're going to try to ride puts down to the next support level at 213. Remember, we're watching the MACD 1 hour time frame to see if it's going to continue to point down. That means that the price will continue to move lower. Palantir, our bright spot of the day. I rode this up from $22, doubled my position at $24, told everybody the minimum target for me was $29. We hit that today. You guys are looking at the weekly time frame. Now, there's lots of things I want to point out to you, but one of them is, again, on the MACD, on the weekly time frame, we're still pointing straight up in the sky. And so even though I am expecting things to get choppy here, and I did get kicked out of my share position at my stop loss at $28.60, 40 cents shy of the price I wanted, $29, I still think that there's a pretty big opportunity for this to continue to move. I want to remind you guys of some very strategic things I've talked about in the past. When you're in the top of a channel, you're in the bull side of the channel, which means right now the bulls still have control of Palantir. Absolutely, they have control. When you're in the bottom half, even though you might be in an upswing, this is where the bulls are losing control of the move. Right now, we're still in the top half. And so I rotated some of my winnings over into some call option plays. I called it a lotto trade, and I'm going to hold it. They're a month out, so I've got some time on them, and I personally think that I could potentially get 100% on these if we do begin to push back to that $29 range. Now, where I see things getting really choppy is between 30 and 31 to 32, that range. Now, it's no guarantee that we're going to get there because people could be selling just like me in advance of that target region while others are attempting to wait for it strategically and it never gets there. And so there is the potential of this not getting as high as I would hope it would be. But again, let's go back and look at that channel. Price action moves in waves, and I think that we haven't fully exhausted the wave to the upside. So to be clear, what I'm expecting is us to back test the middle of this channel and then make one more push up, potentially between $29 and $32. It'd be excellent if we touched the top of this channel, but we don't have to. We still don't have a bearish enough candle on Palantir to get too concerned, but we are in choppy waters, and so control your position size, control your risk. All right, let's talk a little bit about TSM. TSM, this is how I see it setting up. Obviously, NVIDIA's shown a little sign of life, and it wouldn't shock me if Taiwan Semiconductor would follow. At the moment, we did come down and bounce on support at 168. We actually pushed all the way through it, but it held. And remember, guys, that's what we're looking for, is candles and what they look like when they interact with key levels of support. And you can see right now that not only did it hold, but it turned green for the day, which means that according to my potential head and shoulders pattern that I've drawn here for you guys, that we could potentially be making a move back up on Taiwan Semiconductor back to the 185 range. And so this is a play that I'm interested in. Let's talk about Tesla and what it's got to do. I've got a bull case scenario for you, but I'm also going to talk about the bear case. Let me go back to the main screen real quick. If you're following this page, you know that at the moment I am leaning bullish on Tesla, but there is a historic level that we need to close a weekly candle above. Very similar to something I said about Apple stock recently, that we had to close above 236 on the weekly time frame for us to believe that we could go higher. Well, very similarly for Tesla, we've got to get a close above 253 on the weekly time frame for us to get a confirmation that we could potentially go back up to $300 right now. Now, the near-term target I have is 270 and then 290, and then 300 becomes in focus perhaps, but let me just show you guys that inverted head and shoulders pattern, which is leaning me bullish on Tesla right now. Okay, so right now we have made the left shoulder, we've got the head, and we've already made the right shoulder, and we've got a little green candle on the 1 hour time frame. What we want to see tomorrow morning is we want to see price build some momentum up. We want to see it push all the way back to 257, and that's where the really big test is going to play out, because we could get a failed move there at 257 and we could move back. And then if long term, if you are trying to ride puts down, or if you're wanting to hedge Tesla, you want to be cautious in this price zone at the moment because we're range bound. The overall longer term uptrend or downtrend has not been chosen. Obviously, we're near the top of the range, so you want to take greater caution the top of the local range. But truthfully, 253, man, that's the critical line. If we can get above 257 and we can close up there, well, then you see that we have this beautiful inverted head and shoulders breakout, which would then indicate that we will see this next move up to 270. Alternatively, if we were to lose 246, even if we were to come back on 246, we'd still be range bound, but if we opened and closed a candle beneath it, then the support level beneath that is back at 232, and so it gets pretty concerning at that point. All right, let's talk briefly about Amazon. I like the Amazon chart. I feel it's oversold. We're sitting on support. We haven't produced a green candle yet. We've got Netflix is putting negative pressure on big tech, and so I do think that we're going to have another potential push down tonight and in the morning. I'm going to be looking for that move to the upside. First target is 188. Second target's going to be 194. If you guys have followed this page for a while, you ought to know that those trend lines will probably work. We've got to watch them very closely, and we want to play them. Now, we might get in a little early. The way that you control your risk in that scenario is to control your position size. But tomorrow, if we can get a couple green hourly candles in the morning, then I am even going to be more bullish right now on Amazon because I see it having a huge opportunity to make that move up. I think it's simply oversold, and it seems like a place where I want to take risk. All right, let's check out our last couple charts. We've got VFC. Now, this has been a long-term play for me. I called accumulation beneath $20. I actually had a stop loss on some shares that I owned around $20 that stopped me out right beneath $20. And eventually we fell into this area, and this has been in long-term accumulation since. This whole strategy came out in June of 2023, which was to accumulate this bottom for the eventual cup scenario move back up on this quality company all the way back to our descending line of resistance, possibly putting us between $30, $40, and even $50 as a potential. This is still in play, and hopefully once we eventually get a weekly candle to close above $20, well, then it's just going to be all bull time moving forward. Is there any guarantee to that? No. This is called a long-term swing trade, and right now it's looking pretty darn good to me. We finally got some pretty nice life being shown in the chart, but it's going to stay the same plan that I made back in 2023, long-term accumulation of the bottom of the cup for a potential 100, 200% position in 2024, 2025. That's what was said then, and it looks like it's on target. Let me know in the comment section if you're sticking with the VFC strategy and if you think it's going to be a big payday in the days ahead. All right, let's go check out the Apple chart. So in my video just 2 days ago, I talked about the fact that it was all about this channel, that and the price range of 236. I said if we stay above 236 on the weekly time frame, and we stay in this channel, then there's no reason to believe that we won't work our way up to 246. In the same video, I said if we break out of this channel, well, then the up party is over. We're looking at the 4-hour candles. Now, we've already broken some structure at 226, and the next structure is 220, and so I'm just going to keep it very simple. We're going to be watching to see what kind of candle we get at 220. If we get some beautiful green candles with a lot of volume and a very tall tail, then we know that we could possibly be making a push back to retest 236. We don't have enough candles or bearishness at the moment for us to be completely convinced that the Apple move is over just yet. So we're looking to see how it interacts with key levels of support and to see when or if the buyers come flooding back in. But you guys can screenshot this chart because these support levels will work in the days ahead. All right, I'm sure tomorrow is going to be just as volatile as it was today. That time that we would hit 250 and that we would likely hit 260, but somewhere in that range, we were going to find some real choppy waters and that we were going to go into distribution. And it does appear to me today that having broken back into the channel, that we are absolutely in the first week of that distribution move. So the near-term top may have been booked This is my current bias while looking at the markets. And from years of trading experience, one of the other things that I've noted is when the market gets to an all-time high, that's when it begins to get more news driven. And everybody seems to get slapped back and forth between headline news, and the whole thought of fundamentals is entirely taken off the table. Why? Because so much has already been priced in, and so it's more about what could possibly change the bullishness that's been priced in and what would cause people to give up on the bullish narrative, like I talked about at the beginning. That's what's going to drive the markets. We're going to stay in a news-driven cycle moving forward, and it's going to be very choppy. And my number one recommendation, the way that I have survived and succeeded and lived to trade another day and been profitable in this type of environment, is one, be willing to shift from your bias. If you're a bull, and be willing to think bearishly. If you're a bear, be willing to think bullishly. And then the number one most important thing is to scale back on position size and follow the markets rather than attempt to get in front of them. Now, I still make all the same mistakes that I talk about avoiding with the disciplines. That's why they're disciplines, because every single day I've got to put them in force. You want to trade the trend, you want to use a stop loss, you want to control position size, and you don't want to revenge trade. So keep those things in mind moving forward, and I'm sure that we will do well. Guys, look forward to seeing you over in the Chart Goat University, where I'm going to be doing another micro class today. I'm going to be talking about the MACD in particular, and then tomorrow we're going to be doing some live trading. Appreciate each and every one of you guys. Peace and blessings. Hit the like and subscribe, and make sure you get the next video. Talk to you guys later. Bye-bye.